Yo guys, welcome to today's course, and this is a continuation of our course. And in today's video, we're going to talk about something very specific, something that is extremely helpful, and something that you have to understand for you to be successful in trading. And this something we call risk management. Yes, if you do not want to be a broke in trading, you have to understand risk management very well. Now, what is risk management? Risk management is risk management is risking a certain percentage of your account, a certain percentage of your account based off or not based under a specific risk to reward target. If you look at that description, I've talked about two things. I've talked about percentage. I've talked about percentage, and I've talked about risk to reward target. These are two extremely powerful things. So, in this situation, I want to do an example with your account. So, you have $100, 100 USD. How are you supposed to take care of this 100 USD? Caution, if you look at the description of my YouTube channel, none of the videos presented in this channel is financial advice. It is just for educational purposes only. So how are you supposed to manage 100 USD? 100 USD, you find a good trade. Now we need to first explain what is a good trade. Let me push draw, write a box. Let me draw a box. What is good trade? For all the people who are watching this video, know that you are using which is the four-step system. A good trade is a trade that has has all four steps aligned. So if you have all four steps aligned, you have a good trade. But that not not the whole concept of a good trade, because in the fourth step we have three things. We have execution, which is important, which is intertwined with lot size, which is directly correlated with it is directly correlated with what is this with risk percentage of the account, risk percentage of account. That is the first thing, risk percentage of the account. That is what we call, I don't know, execution. That's execution. The second thing that we have is stop loss placement. This is extreme. This is more important than anything else. Stop loss placement, stop loss slash take profit placement. These two are extremely important. I had forgotten take profit placement. These two are extremely important. You have to know where you're supposed to place your stop loss. You have to know where you're supposed to place your take profit. That is understood. And this is what makes you profitable. It is not the strategy, it is not the risk. What makes you profitable is risk. I'm supposed even to, okay, let me to space this out. Risk to reward ratio per trade. Risk to reward ratio per trade. What is risk to reward? If you look at, at this long position, you'll see that you have risk to reward ratio here and it's saying 1. So if I adjust this a little bit, we have a risk to reward ratio of 1 is to 2. This is how you read it. If you see 2.03, you just add 1 before 2.03. So you have to a risk to reward ratio of 1 is to 2.03. This is how you read risk to reward, and this is the most important thing. So let me give you an example. You see a good trade. You see a good trade. We'll call it an A plus setup. You get an A plus setup. Plus setup. How are you supposed to handle this trade? The first thing that you're supposed to do is to understand that my risk management is not based off of something that is constant. I risk according to the alignment of a trade. So if you go and watch all my videos, all my course videos, if you go and watch all my course videos, let's see, course videos, you are going to understand my strategy. There are 12 videos. If all of these things are aligned and the trade is presenting itself in New York session, I risk up to 25% of the account. But for me to risk 25% of the account, we have to have, let me show you. Let me show you this A plus setup, risk 25%. I will risk up to 25. This is the maximum that I can risk on one trade, 25%. But for me to risk this 25%, I need to see a risk to reward of 1 is to 2. That is extremely important. I will give you a little bit of math around this. So, what is 25% of 100 USD? 25% of 100 USD is 25 USD. So, risk is equal to 25 USD. If you do this and get a risk to reward ratio of 1 is to 2, you are going to make a profit. Profit of 25 times 2, 50 USD. 50 USD. You are going to make a profit of 50 USD. Now you get to understand that 50 USD is 50% of the account. This is how I deal with A plus plus setups. An A plus setup is a setup where all the 4 steps are aligned. Let me just write it here. And I'm going to show you practically. Setup where all the 4 steps are aligned and the trade is especially presented during and one session during your session. Don't worry. So is a that is an A plus setup, and I risk 50 USD. Now, if for example today we have an A plus setup, and I've risked 25% of the account, then tomorrow we have a setup where it's not an extremely good setup, it's not picture perfect. Like simply an A plus setup is where all the four steps are aligned. Let me just put into brackets picture perfect setup. It's like a picture perfect setup. It's a setup where unaona like kila kitu iko poa. Kuna setup inajipresenting uko like no, this is an extremely picture perfect setup. That is an A plus setup. I risk 25%. If, for example, you get a trade which is not the best of the trades, we'll call it up an A setup. Let's see. An A setup is we're fucking risking 10%. Now, 100% of the time, 10%, 10%. This any trade yenye si trade fiti na si ni trade fiti. I don't trade a trade that is below an A setup where all my four steps are not aligned. So I risk 10%. And this is the constant. 10% is always my risk constant. Risk constant. The risk constant again, I constantly risk 10% per trade. So if you do the math, and let's say out of three trades, if out of three trades, let's write it here. Let me divide this. If out of three trades, if out of let's say five I get A plus are very rare. I get one A plus setup, setup, four A setups, and accidentally lose two and one is to two are asked how much cash will I have in profit for the week. Kuna mtu anajiuliza mbona nimeandika accidentally because it's impossible. It's impossible for you to have an A plus setup and lose. It's like impossible, extremely impossible. So out of five trades, one trade I risk 25%. So I have 50 USD. Let's see. So I have 50 USD, 50 USD. Because I've made a risk reward ratio of 1. This is my reward ratio. Then I lose two trades. In each, in all the trades I've risked 10%. So that is minus 20 USD. So those are two trades. And I have a profit of other two trades. I have risked 10%. We have risked 10%. Do you understand that? So 5 plus this is one trade. This is one trade. This 20 is this two trades. So that is three. So I'm left with two trades. In these two trades, I'm risking 10%, and 10% with a risk to reward ratio of 2 is 20%. discovered that in 1 week, I've made a profit of 70 USD. Now, what you see in front of you is a risk management plan. And this risk management plan, if you follow it, it is going to take you far. If you risk 25% of the account on an A++ setup, now let me show you an example of an A++ setup. Let me show you an example of an A++ setup. Look at this. This is an A++ setup. Why is this an A++ setup? Number one, price is bullish. I know in the 4-hour time frame. So you go into the 4-hour time frame. Number one, you can see that price is bullish. Number two, we have a level of sellers which have been broken out by buyers to give us an indication. Now we want to move into the 1-hour time frame. Look at this. After price gave us that indication, it corrected. And I know this push we had it during New York session. Let's see. You can see we have London session, New York session, Tokyo session, London session, New York session. So if you had executed this trade around here during pre-New York session, around here, which is the correct place to execute the trade, at that bullish engulfing, and placed your stop loss around here to get a risk to reward of 1:2, which it even went for more. This is an A++ setup. It's a very good trade. That's an extremely good trade. Now, this is a trade where I'll risk 50 USD. I'll risk 25% of the account, which is 25 USD, to make 50 USD. And most of the times, you don't even make 50 USD, you make around 60. Because so every market, this is silver, every market has its own, I don't know, heaviness or volatility. This have as heavy volatility. This is what I mean by an A++ setup. Those are A++ setups. Those are extremely good setups that can change your life completely. That is what I mean by saying A++ setup. That is what I mean when I say A++ setup. An A plus setup, and not an A plus, an A setup is this setup. This is Bitcoin. Bitcoin has been giving us reactions from this level. It hit this level of sellers and then it started giving us levels. And then I saw a little indication and I executed sales during Asian session yesterday morning. This is an A setup. This is a setup where you risk 10%. It is not an A++ setup because number one, the setup is not presenting itself during New York session because New York session is important. It has a lot of volume. This is an A setup. Let me show you examples of A setups. This is also an A setup. This is an A++ setup. I'm going to show you an A++ setup right at, right now. Look at this. Price gave us a low. This is an A++ setup. This is a trade where you risk 25%. And it retested this level of sellers and got that push to the downside. So I executed sales at this area and I put my stop loss around here, and I knew that price was going to sell to this level down here or this level. So I risked 25% and look at what happened. Price hit TP. This is a setup where you risk 25% of the account. This is what we call A++ setup. These are my system setups or ICC setups that present themselves during the right session. And I'm done with risk management. There's nothing else that I can tell you about risk management. Risk management is not as complex as these trading gurus try to tell you. It's extremely, extremely easy. You just have to, number one, get your risk to reward ratio right. Number two, you need to get your stop loss placement right. Number three, you need to have the best take profit placement. Number four, the stop loss slash take profit placement need to give you a risk reward of 1:2 and above. Number five, you need to know if it is a good trade. A good trade will present itself in in the New York session, and in that situation you risk 25% with a risk reward of 1:2. If it's an A setup, you risk 10% with a risk to reward ratio that is constant. This is the risk constant, but it has to have a risk reward ratio of 1:2. Let me draw an arrow from this point to this point of 1:2. This is how you keep your account floating. Never risk more than 25%. Never risk 50%. You can risk 50. There's a trade that will see and it will be A plus 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 plus. You can risk 50%, but how do you know if it's A plus 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 plus? So you need to have this system around. This system will take you far. You need to know a good A plus setup. You need to know the difference between A plus setup and an A setup. The difference is the presentation, which the A plus setup is presenting itself at what session? At New York session. A setup is a setup that is presenting itself at any session, but it's an extremely good session. All the four steps of the four-step checklist are marked. This is an A setup and risk 10% to make 1:2. If you risk 10%, let's say that there is no A plus setup this week. If you risk 10%, you have 10 trades to lose. And if you lose even three trades or five